Google is not research, forums aren't research, Reddit is not research, X is not research. Today, I'm going to show you how I research a stock step by step using real tools, real reports, and zero hype. When I started, I thought I was doing research. I Googled top stocks to buy, I read the headlines, I read the chart, and I felt pretty good about myself. But feeling good is not the same as being informed. That's how I got played. Research isn't just about confidence, it's about clarity. Okay guys, so I've gone ahead and logged into my Charles Schwab's account and I've searched for Apple, since that is the stock that we're gonna look at today. So when you search for Apple on Charles Schwab, you will find this site or this page, and this page will also have several tabs. The summary tab, where you can just see a quick summary of it, any news that is relevant to Apple. You can look at the chart if you want to do a more detailed analysis of the chart. You can change the time frame, the earnings, if there was any earnings that has been reported recently, you can find them there. Any statements, again, you can just find them here. But for our purposes, in terms of stock research, we actually want to go to the tab that is called reports. So we'll go to reports, and when you go to reports, you'll find that there's actually a whole bunch of companies that does an analysis of how a stock is performed. So these are all the analysis from different companies that have actually analyzed how Apple is performing. So what you want to do is you actually want to download these reports. If you want to look at all of them, go ahead, but for our purposes, I'm only going to download 3 of them, and you'll simply click on them, and then I'm going to save, and then I'm also going to download this August one, so I want us to go through that, and then CFRA one as well. And then we'll just go through those in detail. Sure. Downloaded the report, and now it's time for us to dig a little bit deeper into what these reports are all about. So I use Charles Schwab's because it gives me a professional breakdown of the revenue growth, the future earnings expectation, and the industry outlooks. They help me understand, is this company actually growing faster, or is it growing slower than its peers? And are the analysts recommending that you buy, you hold, or you actually sell the stock? So the first report that we downloaded was the actual Charles Schwab report, and as you can see, it's dated March 28th, 2025. So that's also important because the Charles Schwab actually posts the most latest analyst reports, so it's always up to date and it's always relevant. So the rating that they have given to Apple is a B, meaning that it's outperforming the market. And what a B means from this report is that you can actually buy Apple because it's really doing well. And what this report also shows you is the basis for why they actually decided that Apple is the B. Apple has actually outperformed the sector. So they look at price volatility, and again here they say what is the rationale behind why they selected a B. And you can go ahead and just dive deeper into this report, understand the rationale behind it. But those are mainly what I look for. So I'll go ahead to another report, which is the August report. And again, this one was created June 31st, 2025. And as you can see, August recommendation is that for the next 12 months, you should buy. For the next 5 years, you should buy. But this is, of course, not financial advice, right? Because if August actually created this report on January 31st, and it's now April, it means that a lot could have changed. So you will probably need to maybe find another recent report and see what they say before you can actually make your decision. Okay. And the other thing is, in this report, sometimes you'll actually see who the analyst is. And I mean, of course, we don't know this person, but the most important thing is this designation, CFA, because that means these people are professionals. They know what they're doing. they are qualified to actually give you recommendations, So if you were to actually use an investment company to make an investment on your behalf, you will actually deal with CFAs. But in this case, you don't have to deal with them indirectly. You can just read their report. So it definitely helps in making your investment decision. And that rating again is a buy rating, and they go through the reasons as well behind why they said it's a buy rating. So you can actually read through all of this. It's a 6-page report. It's not a lot, so definitely read. And if you understand it, great. But for me, I just look at the most important things, like maybe the short summary of the reason behind why they gave Apple a buy rating. And then I'll actually move on to another report, which is the CFRA report. This one was created on April 3rd, 2025. So this is the most recent one. The recommendation is a buy recommendation. And again, you can see the analyst's name here. He is also a CFA, and this is coming from different companies, right? So you need to remember that. But again, this is not financial advice. So they also get into the details of why they actually recommended Apple as a good buy. You can go ahead and read all of this. You can read the earnings forecast that they have, the investment risk or rationale behind the buy rating. And this one is a 9-pager, but I think it's mainly because they have a lot of forecast or a lot of past data. But other than that, just go ahead and read them. Also, I've decided that we should look at Apple as an illustrative example on how to download the 10K and how to see where to actually find the earnings call. So I'm gonna go ahead and search for Apple, since most people use Apple anyways. So when you go to your Apple, you see the standard website that you see all the time, and depending on the setup of any stock that you look for, you want to see where the investor relation page is in that website. So for Apple, obviously the top part is literally the products, and we don't want to see that for now unless you want to buy the new iPhone. But in order to see where the investor relation is, you're going to scroll all the way down, and you can see there's a lot of things that you can have a look at, but we're going to just go to about Apple. You see here they have newsroom, Apple leadership, career opportunities, investors. And if you want to be an investor, this is what you're more concerned about. So we're going to click on investors. And then the moment you get there, you'll see there it has a lot of things. You can actually just check out the stock price. They even have a chart to show the performance for the past 6 months, year to date, 1 year. They also have a link to the SE filings, so you can get an alert if there is any form of SEC filings that you want to check out. And then what we want to look at though is where to actually see the earnings call. So the moment you just scroll downwards on the investor relations side, you will actually see investor updates. There's a second quarter results that's coming up on May 1st, 2025. And already the time is set there. You can literally just come here, click on it to listen to the results when they come out. It is that easy. And trust me, you're going to get valuable information when you do this. The other thing that we want to look at is how to actually download financial data so that we can be able to analyze how the company is performing. So they have the quarterly earnings reports. If you're interested in that, you can just download them. There's a whole bunch of them, right? So what I am actually interested in is the annual reports or the from 10K, especially the latest one. I mean, you can go back 5 years depending on what time frame you're looking at, but for today we are just going to download the 2024 one, and I'll go through it with you guys to just go through what exactly are we looking for when we're looking at the 10K. So you're gonna download it, and then you can just save it to your downloads. The most important things, which is our financial statements. We want to look at the income statement, balance sheet, and our cash flow statement. On what you want to understand about the business and everything, so I'm just going to go to item number 8, which is financial statements and supplementary data. So we're going to click on that, and immediately it's going to take me to the index of the consolidated financial statements, which includes the statements of operations, which is our income statement, consolidated balance sheet, and then the cash flow is also there. So I'm going to go ahead and click on consolidated statement of operations. This will take us to our income statement. So what we want to look at from the income statement is we want to look at our revenue. In this case, it's described as sales because of the type of product that Apple sells, right? So you want to make sure that the company's revenue, or sales, is actually growing. And then after that, you want to make sure that that is consistent maybe with the expenses, and that the expenses are not way higher in the current year than they were in the prior year. So for example, our revenue, as you can see, our revenue increased, which is good. And then when you go to the cost of sales, you can see that has also increased, which explains why our revenue has increased from prior year, because it might mean that we actually produce more products, new iPhones in this case. Same for operating expenses. If they are actually developing new products, they spend more money on research and development to actually enhance the iPhones in this case, and all the nice goodies that you guys will be using. So that is pretty standard. And the other thing is you want to come and look at your net income, right? So it's one thing to actually look at the net income and look at the current year, but what will be valuable for you is to actually compare that to the prior year. So here they actually have a prior year column, which is September 30th, 2023. And you can see last year that overall net income was 96 million versus this year 93 million. And I mean, it's not such a big movement. They're still making profit. And if you want to look at why it decreased, I mean, the difference is like 3 million to Apple. That is not significant. And if you're investing in $1 billion company, honestly, that is not really significant. That's not material at all. But what matters is that they're actually making net income, right? And then from there, you then want to go to the balance sheet. What you want to look at in the balance sheet is your cash. You want to make sure that they're actually generating positive cash. When you look at current year and you compare it to prior, you can see that cash is fairly stable, so nothing really crazy there. And then you also want to look at your total assets. You want to make sure that is positive. And from here you can see the total assets has increased, and that was mainly driven by other non-current assets, so we don't actually know what's sitting in there, but it was also driven by accounts receivable, right? But they have positive cash. And the next thing that you want to look at is your debt. You want to make sure that they have what you call healthy debt, not too much debt. Too much debt can be very risky, because it means that if anything were to happen, they can actually just close down like that. But I mean, Apple is a very big company, so that won't happen. But apart from that, the balance sheet is very healthy. But nonetheless, you want to look at that debt to make sure that they don't have too much debt. That is important. Debt is healthy. Too much debt, that is a problem. And again, you want to compare it to the prior year. Like, has debt changed? Did they increase that debt significantly? Was there anything that happened that made them increase that debt? Of course, you're not going to find all that information in the balance sheet, but the balance sheet just gives you like a snippet of what to actually look for when you break it down, right? So you can see that current liability speaks to liabilities that need to be paid within the next 12 months, whereas non-current liabilities is assets that need to be paid within 2 to 5 or even 10 years, depends, right? So what you want to look at, first of all, you want to compare it to prior year. As you can see, the current liabilities has increased, and you probably want to know like why, which one is significant. I usually like to look at the line items that are significant. Some of them are steady, but what's standing out to me is other current liabilities. I definitely would like to know, okay, what exactly is sitting in other current liabilities that has led to our current liabilities increasing. So whenever you look at the balance sheet and it has sections as other current assets, other current liabilities, you will find a breakdown of those in the notes to the financial statements. But yeah, so the current liabilities has increased slightly, and the same thing for non-current liability. Actually, no, non-current liabilities has decreased, so that is good. It means that the company doesn't owe too much debt in the future. So it's also really important for you to look at those two things. What you also want to do is you want to look at the statement of cash flows. Again, just look at that cash, how they actually generated that cash from operating activities. And if you look at the first section, that will be your cash generated by operating activities. Again, compare that to last year. It has increased, and you can look at what that is made up of, what resulted in an increase. But Apple's cash is pretty standard, pretty steady, so we're not going to go too much into the detail. And then when you scroll down, you'll find the notes to the consolidated financial statements, and this will basically show you a breakdown of everything that we saw at the top. So this is where you'll actually drill it down to get more understanding of, what has actually driven this. So for example, the sales, we saw that sales has actually increased, and you can actually see it's been broken down by iPhone, Mac, iPad, wearable, whatever. And then you can do a comparison to prior. I think what's standing out for me is services has increased. I don't know what services is, but it actually has a footnote here to say that sales includes amortization of deferred value of services bundled in the sales price of certain products. And then iPhone, you can see that the sales from iPhone has also increased. Every year there's a new iPhone and people buy that, so you will expect those type of sales to happen. And then you can look at other notes as well if you have time, but this is where you will actually see a more detailed breakdown of what's making the numbers in the income statement, the balance sheet, and the cash flow. Now this is where the real gem is. You get to hear leadership speak directly to you, and the Q&A sessions reveals information you wouldn't find in any report. It's like sitting in on a board meeting. You can find earnings calls on investor relations site or even on YouTube. Don't have Charles Schwab's? No worries. Use Yahoo Finance for charts and ratios. Morningstar for free reports. FinViz for screening. SEC Edgar to pull official filings. Research isn't sexy. It's slow and it's quiet. But it gives you confidence that isn't built on hype. It's not about finding the next Tesla. It's about understanding what you're investing in, and that's power. If this helped you, subscribe and share this with somebody who needs to break away from the hype.